Hey everyone, back again for another edition of That's Our Two Satoshis Live, talking about the ARCA blog that you can find on ar.ca. I'm Jeff Dorman, Chief Investment Officer, joined this week by frequent guest Hassan Basiri. How are you, pal?
Good, Jeff. How are you?
I'm good. I can only assume you were calling in from your grandmother's house with the floral wallpaper behind you.
She sends her regards.
Good. I hope she's long Bitcoin and ETH.
Uh,
All right. So
in spirit, she is.
By the way, have you seen the movie Encanto? Because I titled my blog this week, "We Don't Talk About Luna," which is a reference to the song "We Don't Talk About Bruno," and I got a lot of heat for that. So apparently, me being just an old guy with kids, I'm the only one who saw that movie, or have you seen it?
I have not seen it either, but if it means being long Luna, you should be doing that.
I agree.
So
Well, we are, and I agree with you. All right. Well, before we get into Luna, let's talk about some other things going on in the market. First and foremost, does it surprise you if I told you that through Sunday, when I updated this, the S&P 500 was down 4.6% year to date, and the Bloomberg Galaxy Crypto Index is also down exactly 4.6% year to date? Given what is going on in the world with the carnage in the bond market and the volatility in commodities and everything that's happened from the whipsaw of the Russian ruble to anything involving wheat and metals and everything else that's out there.
I mean, I think crypto native money is sticky, and the ecosystem has been good for a lot of crypto native funds and people. So I don't think they're not looking for the exits. If anything, they're just looking to put more money in. So it doesn't really surprise me, to be honest.
Yeah, I agree, and it's actually we put a chart in the write up. But if you look at the first quarter asset class returns, I mean, Bitcoin. First of all, the fact that Bitcoin is now in this chart is a win for everybody involved in digital assets. But also, I mean, you look at what did well. It was commodities, it was gold, and that's about it. And everything else was, and then Bitcoin being basically flat, and everything else was down quite a bit over the course of the first quarter. So I think that's a big move. I think that's a big number. Even though we all know that Bitcoin is not necessarily the market, it's certainly the most recognizable asset in the digital assets market. And when you talk about these big cross asset allocators, from your pensions to your endowments to even the big banks and brokerages, to see that kind of relative performance in the aftermath of what happened in the first quarter is a pretty big deal. I think the 60/40 portfolio is just dead. And people are looking at ways to increase the return potential while not necessarily increasing the volatility. And I think digital assets are going to come through again, for what feels like 9 quarters in a row now of either relative or absolute strength. I will ask you this though, Hassan. Even though the market was down in the first quarter, there was 50 or so tokens that were up quite a bit in the first 3 months of the year. And to me, it's a very eclectic list, and what I mean by that is last year it was very sector specific, right? DeFi rallied all at once, and then gaming and NFTs rallied all at once, and then Web3 rallied all at once, and your legacy, Robinhood like tokens rallied all at once.
Right.
This year, it's all over the map. You have things like Maple up 180%, Rune up 50%, Leo up 60, FTX up 24, Zilliqa up 100, Luna up 25, Waves, what do you make of just the randomness, or as I said, the eclecticness of where the gains are coming from so far this year?
I think it's a lot to do with, I think the crypto market is maturing, and it's a lot to do with idiosyncratic opportunities within these coins. Like, what does the price of Curve have to do with the price of Bitcoin? Very little to anything.
Yeah.
So as the market matures and asset returns continue to disperse, smart money or crypto native funds are actually great smart retail investors. They're going to see opportunities in these coins that it doesn't make sense for it to be down 30% just because Ether Bitcoin is down 30%. This thing is spitting off cash flows and accruing value, so it should be going up. And I think you're starting to see that in the market. And as we're at like roughly 2 trillion market cap now with digital assets. As it continues to grow, I think you're going to see that, and it's just going to look exactly like the S&P. There's always a bull market somewhere, and your job is to be looking for it. So I think it's really healthy, and happy to see it.
Yeah, I agree, and I think you hit it on the head. And look, heading into April and the second quarter, April is one of the best months on record if you believe in seasonality for both Bitcoin and Ethereum and the broader market, as well as for equities. April is almost always a positive month. So I think with a lot of the negative headwinds behind us and some tailwinds ahead of us here with the macro picture improving as well as ETH 2.0, we're set up pretty well for a good second quarter here. All right, so let's move on. Ronin. I wrote, and I'm curious what your thoughts on this. I wrote that, if you look at Ronin being hacked, for those not familiar, the Ronin bridge, which connects Axie Infinity's Ronin sidechain to Ethereum, was drained last week for about $625 million worth of ETH and USDC. This is obviously not the first bridge exploit. We've seen Wormhole less than a couple months ago getting hacked for $325 million. Our own Peter Hans, and Ronin has already come out and said that they're, between them and Sky Mavis, they're going to plug this hole. We know that Jump, plugged the wormhole hole 2 months ago. There's a lot of people who are crying foul, saying this is why DeFi can never work. And I actually thought our own Peter Hans at Arca had a pretty good analogy. He said basically these hacks are the equivalent of if Starbucks' app was hacked and all the reward points that you earn at Starbucks were drained. Starbucks basically has a choice, right? Either they say, well, that's not on us, that's fake money. We're not going to honor that and risk, damaging their long-term brand and their reputation and their customers. Or they basically just say, yeah, we're going to find a way to make customers whole. Don't worry about it. And that's kind of what we're seeing now, right? We're seeing this almost like too big to fail mentality where, these centralized entities behind, whether it's decentralized or not, there's always a centralized entity somewhere that is on the hook.
Right.
They're plugging these gaps. Do you think this is sustainable? Do you think this is just the way it is? Do you think these are one-off cases? What's your take here?
I definitely think that. I think at this size of hack, when you have this strong of a community with Axie, which at some point was doing like over 1 million DAUs onto the Ronin bridge per day, I think there is an obligation there to kind of make the users whole. And you've seen it with Jump, right? Jump didn't have to plug a $250 million hole. Wormhole is going to raise at $2.5 billion. They could have waited, and obviously that would have impacted the valuation. But I do think at this size, there is an obligation to make users whole. That it's true that kind of kills the point of DeFi, but nothing starts off purely decentralized. Decentralization is a spectrum, and they start centralized, and over time they migrate towards decentralization. And the space DeFi is like less than 2 years old, so that's just telling you, like, over time it's going to be more and more decentralized. But right now, when there's still bugs and it's this kind of money that you're throwing around, I don't see anything wrong with them plugging the hole. And I think maybe they don't have a legal responsibility, but they do certainly have like a sentimental and duty to their users to do so. So I'm excited to see it, but I also expect it.
Yeah, and I agree with you because you said the key point, which was that you're not decentralized overnight. You have to work towards decentralization. And we talk about this all the time, right? That we people throw around the term centralized and decentralized, but the reality is it's a spectrum, and there's very few things that are fully centralized and very few things that are fully decentralized. And I actually think what SEC Commissioner Hester Peirce wrote almost over a year ago now, or 2 years ago, when she wrote the 3-year safe harbor idea, I think that's basically demonstrative of what we're going through here, right? If you actually read what she wrote, she said, we seek to provide network developers with a 3-year grace period within which, under certain conditions, they can facilitate participation in and the development of a functional or decentralized network exempt from registration provisions of the federal securities law, which basically is exactly what you just said, right? We're going to let you be centralized for a while and fix your problems and figure out how to get there, as long as you have a plan and have some proof that you're heading towards decentralization. And I think that's exactly the same thing here with Ronin and with Wormhole and everything else. It's like, if you want to get to a decentralized solution, great. But you need to have some centralized backers in the beginning until you get there. So I think this is a trend. I think it's actually good and healthy. And I wish more people had taken seriously at the SEC what Commissioner Hester Peirce had said. So we'll see. Okay, last thing here. Let's talk about one of our favorites, Terra Luna. My opinion on Luna right now is if you look at, and for those who don't know, Hassan is in the weeds every single day looking at investments in digital assets. There's nobody smarter than him in terms of knowing the ecosystem. I am just a suit who talks to investors and talks about all the different things going on in the digital asset world. But I can tell you that, over the last couple of years, this market went from everybody just knowing about Bitcoin and maybe even Ethereum to all of a sudden starting to have real opinions on things like Solana and Avalanche and Terra Luna. And Terra Luna is absolutely 100% now in the day-to-day discussions of big banks, big brokerage accounts, big institutional investors. Why don't you walk through, how we got here, and more importantly, what you think is happening here with UST being backed by Bitcoin and what Do Kwon is doing here to increase the reserve backing.
Yeah, so I think everyone in our audience is familiar with Luna and UST because we talk about it at length. But essentially, for every dollar of UST minted, that means $1 of Luna has been burned. So memetically, the meme is the more UST in existence, theoretically, the higher the price of Luna should go and the higher the market cap of Luna should go because there's less Luna in circulation. People, naysayers or haters will say that, well, this creates a reflexive downward loop where if the price of Luna goes down and people want to redeem their UST, they redeem their UST and they force sell Luna. And like this leads to a reflexive loop on the downside because the more selling, Luna goes down further and further and further. And you don't have any exogenous collateral in the system to support these supply shocks. So to kind of put this conspiracy theory to rest, Doe and TerraGuard Foundation said, well, we're going to buy $3 billion worth of Bitcoin and put it in the community pool. And what will happen is if people want to redeem UST, they will first redeem it via Bitcoin, and that will support Luna. That will act as a buffer for the Luna. And then after that 3 billion, what Luna and UST are going to start doing is as they distribute UST to these other ecosystems like Avalanche, Solana, and they earn Avalanche and Sol tokens, UST will act like as a FX currency reserve where the Luna, the AVAX and the Sol that Luna receives, they will further backstop UST. So it'll be like Bitcoin first, then Sol and AVAX, and then Luna at the very bottom. So if you want to redeem your UST quickly, you have to go through these 4 layers of backstops before it gets to Luna. And this is super, super interesting to us because it creates one, exogenous value from outside the Luna ecosystem in the form of Bitcoin. And 2, it makes UST more composable. UST is now in the Sol ecosystem. UST is now in the AVAX ecosystem. And UST is now being used soon to be used in Washington National Stadium to buy beer. So the more faith people have in UST and the more people transact in it, the stronger Luna becomes. And that's why we remain super bullish on Luna in the long term and short term.
Yeah, and there's for those who want to actually read the blog, again, on our website, ar.ca, ARCA analyst Bodhi Pinkner put together a couple of awesome sensitivity tables talking about what the math behind what Hassan's talking about here. So just to give some numbers here for those lunatics who want to get super bold up here. If you assume the Luna price right around $110 where it is today, and you think UST market cap is going to go to 50 billion, that means that 87% of the Luna supply will be burned over that time. Said another way, if you flip it upside down, is that if you assume that the Luna market cap stays exactly where it is today at a $50 billion market cap for UST, it implies a $748 price for Luna. So that's a lot higher than the current levels of 111. So pretty good sensitivity table, pretty good bullishness. I come away really a little bit differently, not differently, but I come away with three really important takeaways from what's happening with Luna and with Bitcoin. I think the first is that stablecoins again are undeniably one of the biggest success stories of digital assets, right? Going from basically zero AUM to almost 200 billion across all stablecoins in the last 2 years. You could say that there's basically only been 3 or 4 really successful use cases of digital assets so far. The first being Bitcoin and store of value, second being DeFi, the third being NFTs, and now the fourth being stablecoins. That means if you want to take a pure play bet on stablecoins, really the only way to do that is through owning Luna, right? That is the only pure play way to say, I am just making a bet on the growth of stablecoins. So I think that's incredibly powerful. Second is that, Luna is an amortizing token, as Hassan was just describing, right? For every dollar of UST that is minted, a dollar worth of Luna is burned. That means that puts Luna on par with things like Leo, BNB, FTX. Amortizing tokens where as the cash flows or as the profits or the earnings, or in this case as the UST growth grows, you are actively paying down the tokens, right? And we know that BNB is one of the best performing tokens ever. FTX is one of the best performing tokens ever. Leo, up 6x from where it was 2 years ago. Amortizing tokens work. And the third, and probably the most important, is that every single Bitcoin maximalist, and there are still a lot of them out there, are now going to be lunatics because Luna is the first real case study of a project out there saying that Bitcoin is the best form of collateral, and we want to use it. So when you turn all of those Bitcoin maxis into Luna fans, that's a huge buyer base that's going to come over to the Luna family. So I agree with everything you're saying, Hassan. I think this is super bullish what they're doing here, and bullish for Luna, bullish for Bitcoin. It's probably going to set the stage for others in the future to do the same thing.
Yeah.
So,
and like one thing I'd like to add is like, I don't want to play into, I'm sure people that watch this are pretty up to date on like crypto Twitter and stuff like that. Do Kwon has been not fighting, like the Maker team and the Maker bulls are fighting with Do Kwon because another algorithmic stablecoin is DAI. And in about a year, DAI's market cap has more or less been stagnant at around 9 billion, while UST continues to print and be created at 17. And so what Do is doing by minting UST, putting it into other ecosystems, it just makes so much more, it makes me so much more bullish on Luna, because DAI has kind of stalled, and with it the Maker price has stalled. Not there's any, we don't just look at price, but I'm saying DAI's market cap hasn't really grown, where UST just continues to print, and you're seeing the market favor or like reward Luna and not punish Maker, but not give Maker credit for that $9 billion in DAI that it has outstanding. So it's just another like factor of confluence for the Luna bulls.
Yeah, and for those who haven't ever checked out the dashboard created by theblockcrypto.com, if you go to their dashboard, there's a whole section on stablecoins, and you can see not only the overall growth that we're talking about from basically 0 to 200 billion outstanding, but also the share of what that 200 billion is between Tether, which used to be the market leader, but then started getting eaten into by USDC, which was then getting eaten into by DAI, and now everything's getting eaten into by UST. UST is absolutely the fastest horse right now. And actually algorithmic stablecoins in general, compared to debt-backed or centralized. There's a reason for that, right? There's a reason for that growth and that market share that UST is taking now. So pretty bullish story. I know a lot of people, I know this is a polarizing topic. I know a lot of people in digital assets like to always look for the worst case scenario. We're a little bit more optimistic here. I think it's fun to root for the underdog and see this kind of success. So, as always, we are more than happy to talk more about Luna or about Ronin or about anything else. Hit us anytime. Hassan can be reached at Hassan Basiri on Twitter, and I'm sure most of you have found him on Telegram already. But we encourage everyone to reach out, talk to us, hear your thoughts. Any closing statements here, Hassan?
No, just things look good. Let's keep it going.
Bullish? Are you bullish?
Very bullish, always.
Right.
Unless when it goes down.
Except for when it goes down, right?
Yeah.
Good stuff, my man. Well, thanks for joining, and everyone, thanks for listening to us, and we'll see you again next week.
Thanks. Bye.